little bit. But let me now welcome on board Manoj Kumar Dubey, the CEO and MD at IRFC, joining in on the show right now. Mr. Dubey, hi, morning. Great to have you on ET Now. Thank you so much for your time. Firstly, I want to talk about, this recent deal that you've actually signed up. Of about almost 9,821 crore rupees of a loan agreement with DFCCIL. Tell me, how exactly is it going to benefit you in terms of your AUM growth, and what is going to be the impact on your overall profitability?
So, very good morning, Ayesha. As we spoke to you people when we got our Navratna status in the month of March, and then we embarked on our journey of diversification. And we have been telling market right since the beginning that in IRFC 2.0 version, we'll be focusing on taking into account the businesses which are all in the railway ecosystem. Going in those lines itself, this is one of the biggest deals that we did with our siblings DFCCIL, Dedicated Freight Rail Corridor. This was a loan which was given to them from World Bank, and with rupee sliding and dollars getting dearer, these loans were getting very costlier for them. So we pitched in, and this is one of its very unique kind of deal where every stakeholder was very happy. World Bank was very happy getting it refinanced through us so that they can use this money to other projects in the country. And as DFCCIL has already come out with the information that they will be saving in tune of around 2,700 crores throughout the tenure of the loans. And at IRFC, this is a disbursement that we have done the very same day when the agreement was signed. And this is going to give us a lot of impetus in terms of our NIM, AUM, as well as the margins.
Okay. Would you like to give us any numbers? What kind of AUM growth are we looking at? And also, how does this deal really impact your overall disbursement targets for the fiscal year?
So, as you know, we had given guidance right in the beginning of the FY for around 30,000 crore of disbursement and around 60,000 crore of signing of the agreements and sanction of the projects. We are well on the course. You have seen our Q2 results up to H1, I believe. And when we are closing on our Q3, the way things are going on, the way we have already informed the exchanges, we are nearing completing our target of sanctioning of the estimates and signing of the agreements. And on disbursement also, on pro rata basis, we should be completing or going ahead of the 3-quarter targets. So we are well on the course of what we have set for ourselves, what we have informed the market regarding our guidances. This is the first year of diversification, and the way we are winning the assets through the participation into RFPs, and the way disbursements are taking place with a few of the refinancing things that we are doing, we believe that the future lies very good for us, and we are on course of having positive AUM going forward.
Okay. Also wanted to understand, these new agreements that you've signed worth about almost 45,300 odd crore rupees, right? All through Q2. How quickly do you expect these to translate into actual disbursements for you? Any timeline you could give us?
So, you see, for a greenfield project that we sign, normally within 2 to 4 years, everything is disbursed. But since we embarked on diversification plan, this is for the first year for us, and we actually did not have any pipeline because for the railways, whatever used to come, it used to be disbursed in the same year. So this was a very exciting, I would not say the challenging, but a very exciting year when we started signing of the agreements as well as disbursing. So we set for ourselves 30,000 crore, which is nearly 50% of the 60,000 crore sanction that we set for ourselves. And we are right on the course of that also. As I mentioned to you, with this 10,000 crore, nearly 10,000 crore that we disbursed for DFCCIL, we are quite on track of achieving our disbursement targets for the year. And by the end of Q3 itself, our targets for sanctioning of the estimates will be completing. So anything which comes in Q4 will be icing on the cake. And normally, as you ask the question, normally 3 to 4 years for any greenfield project that we sign, we disperse all the amounts. So that is how it goes.
Okay, understood. Also, your AUM has had an uptrend growth supported by diversification beyond railways that you've always emphasized on. Tell me which segments are expected to drive incremental disbursements for you over the next few quarters?
So apart from the railways, which for whom we still remain the sole financing arms, whatever they look from us, that will always be there. Apart from that, in the diversification, what we are doing is in the railway ecosystem, like our siblings of DFCCIL, Concor, RVNL, IRCON, if they need anything, we are always there to pitch in. There are a lot of SPVs, special purpose vehicles, that railways are creating along with their PSUs for last mile, first mile connectivity, for development of the MMLPs. They are also our business. On the rolling stock side, we have already done rolling stock financing for NTPC. Maybe the oil companies, IOCL, BPCL, HPCL, if they need any green tanks, we are there to finance them also. Apart from that, in the power sector value chain, we are only looking for the GenCos and Transcos. Discoms are not our business. So anyone who is having a backward forward linkages in terms of GenCos and Transcos, and that too for any CPSCs which are doing well, like NTPC, Naveli, SJVN, these are the entities we are looking forward to them. And on the states which are doing well, where the balance sheet is good and they are A-rated, we are looking for them also, but only in GenCo and Transco side. We are also looking at the government ports. Port is one of the linkages with the railways, and there are a lot of mega ports are coming on the western side and the eastern side as well. So we are looking forward to their business also, and we are very aggressive on giving a solution to metro railways and the urban transportation. You know, earlier it was only bilaterals and multilaterals who were funding it. We are into talk with World Bank also to evolve a method where we can do the funding jointly, where we pitch in for the rolling stock and they pitch in for infra kind of thing. And later on, when the commercial activity is being done, that World Bank thing also may come to us. This is in the nascent stage. We are already in discussion, but yes, we have a very close focus on the metro business also and the urban transportation also. So the platter is full of different kind of businesses which are having backward and forward linkages with the railways.
That's quite interesting. So the NIMs that you've managed to clock so far, and it's now improved to 1.55% because of this asset mix, is it sustainable going forward? Or I should ask, in fact, are you going to better it for sure?
Oh yes, Aisa, that's a very good question, and I've been emphasizing in all my con calls. You know, with diversification, we are garnering more than 100 bips, maybe 120, 130 also in the businesses. While in railways, all 38 years, we were getting only 40 bips and 35 bips on rolling stock and projects. So it's a very exciting time. Despite funding to the government entities where the risk is minimal or zero, I believe, still through the competitions, we are getting the margin of more than 100 bips, which is nearly 3 times of what we used to get in the railways. So I believe that going forward for many, many quarters, maybe 16 to 20 quarters, maybe 4 to 5 years, there will be continuous improvement in the margins and NIM for this company. Maybe after 5 years, when the proportion of diversified assets and the railway assets are nearly 60-40 ratio, we may have to look how quickly it will grow again. But rest be assured that next 5 to 7 years, because of diversified mix into my total assets, the NIM is going to show a very good improvement every quarter.
Would you give us a broad range at least? Where is it that you plan to take it to from 1.55%, say, by the fiscal close?
So yes, Aisa, going forward, we will have 2 kinds of assets with us. One, the railway assets, which is right now more than 95%. And 2, the non-railway assets or the assets in the ecosystem, diversified assets. So for the diversified assets, the NIM is always going to be more than 2%. While for the railway assets, it will always remain in the range of 1.4. So mixing 2, going forward, every quarter you will see a kind of steep growth in NIM. You can put the numbers, But I can assure you that for the non-railway business that we are doing in the railway ecosystem, NIM will be more than 2% by default. And for the railways, as it is fixed, 40 bips and 35 bips, so that NIM will be 1.4. Now, the question is going forward, what percentage of non-railway business is going to be in my kitty? So that will have the impact on the total NIM. And as I mentioned to you, every quarter you will be finding a better and better overall NIM for the company.
Okay, Manoj, great to have you today on ET Now. And here's wishing you and your entire team at IRFC a very happy and prosperous new year from us.